Not only do you not need a perfect credit score, you probably don't want a perfect credit score. Let me explain. First of all, who am I to be talking about a credit score? I'm just some bozo on the internet, right? Kinda. My name is Sean, and I created an entire course from scratch, which was taught at UC Berkeley for real credit. Whole course was recorded entirely for free, not trying to sell you anything. Check it out in the link in the description. But just as I think I know my stuff. So now before we talk about why you don't want a perfect credit score, let's talk about what a credit score is and the factors that are behind it. So essentially, a credit score is just a numeric value that is given to you that tells banks how creditworthy you are. If I'm gonna loan my friend $100, I wanna know their history of borrowing money from other people. Do they actually pay them back, or am I gonna be left hanging dry? There's a variety of ways that a credit score can be calculated, but the mainstream way is the FICO credit scoring model. Now this score can range from 300 on the very low end to a max of 850. There are 5 main factors behind this score. Factor number 1 is unsurprisingly payment history. Are you paying off your If you're not, then you're gonna have a bad credit score. End of day, go pay off your stuff. This should be of surprise to no one. The second most important factor is amounts owed, or you might hear this referred to as utilization. Essentially, if you have a $1,000 credit line on a card and you use up 90% of it, it looks risky to banks. Whenever they're giving you money, you're using up a big portion of whatever credit line that you've been allocated, and it looks a little sketch. So the fastest way to increase your score is keep this utilization as little as possible. Utilization is only typically reported at the statement close date of your cards. So if you pay them off in advance, then the utilization will report as 0% and won't even show up on your credit score. Essentially, just pay off your cards extra frequently and your score will go up. Now, if you screwed up on this and you have high utilization one month, no sweat. This is currently the only factor of your credit score with 0 memory. So if you screw it up one month and then bounce back to like perfect, then it doesn't matter. It was the same thing as if it was perfect both times. It resets every month. Factor number 3 is your average age of accounts. Basically, how old are your credit cards and your lines of credit? The older the credit cards, the older the lines of credit, the better it looks to banks. Someone with 10 years of credit history is a lot more stable than someone with 2. The fourth factor is hard inquiries. What is a hard inquiry? Basically, anytime you apply for some new line of credit, whether it be a credit card, a loan, potentially a credit line increase, etc., the bank is going to check your credit score for the purposes of making a lending decision. When this happens, you will usually receive a hard inquiry, basically a running tally on your credit score of the number of times you've applied for credit. This isn't too big of a deal. These disappear after 2 years, but you do want to keep them lower if possible. Also, you receive these whether or not you're approved for that credit line or not. So I could go get 15 denials for credit cards and I got 15 hard inquiries. So only apply when you think you're going to be approved. The fifth factor is credit mix, and there's really not much you can do about this. It's really just the variety of types of credit you have. So having like mortgages and installment loans in addition to credit cards is actually considered better for your credit score, but don't get a mortgage to just increase your credit score. Don't be an idiot. Nothing you can do about this. Who cares? It's very little effect anyways. We've covered the 5 factors that are important for your FICO score. Pay off your stuff on time, keep low balances on your cards, or ideally no balances on your cards, just pay them off. Have old accounts, don't apply for credit frequently, and have a credit mix. If you do all these things, it's entirely possible to reach a perfect 850 credit score. But I would argue you shouldn't do that. It's actively not in your best interest. Why? Having a higher credit score is typically better for any time you're applying for some kind of credit product, whether it be a mortgage, car loan, other credit cards, etc. But there's a point of diminishing returns. Anything above 800, 810, you're gonna get the same interest rates and approval odds as someone that's, let's say, 850. So sure, there's diminishing returns, but what's the actual harm? What's wrong with having a higher score? Well, here's the thing. Whenever you have an 850 score or something really close to that, it probably means you haven't applied for credit products, such as credit cards, in a fairly recent period of time. And weirdly enough here, not applying for credit cards is costing you money. There are brain dead, simple to get, easy cards that require $1,000 of spending for a sign-up bonus that have no annual fee that will give you, let's say, $200 of cash back. So let's say you open 2 credit cards a year like this, that's $400 a year that you can be getting brain dead, super simple, super easy. So your options are have an 850 credit score and not apply for any credit products, or have, let's say, an 810 credit score, get the same interest rates and approval odds as someone with an 850 score, but be getting, a minimum of $400 back a year for basically no work. To me, it's an obvious choice. If I'm gonna have the same interest rates, the same approval odds, why would I not take the free money? The only disclaimer I have to give on this is if you're gonna get like a mortgage, you should take at least a year gap because that can make some difference. Now you would think if you have an 850 score versus an 820 score, that there's going to be a reasonable difference in the interest rates you would get and approval odds for things, right? Wrong! If you made it this far, you probably liked the video. Please give me a thumbs up and consider subscribing because most people watching are probably not subscribed. Trying to reach 1,000 soon. That would be great. Let me know in the comments down below what type of video you want to see in the future. Just don't comment credit score because if you try to type that, it won't let you publish or comment to my channel. And thank you for watching.